Hello, folks. Welcome to our presentation today. This is David Russell. I am the VP of Market Insights and Research at TradeStation Group. It's great to be with everyone today. It's my privilege to welcome Steve Kalayjian of SK Trading for a presentation called Targeting Potential High Probability Futures Setup. I'm going to just quickly show you guys some disclosures. All right, I'll be right back. Okay, there you go. Hey, Steve.
Hey, David.
Hey, Steve. Great to be with you. Thanks,
Hey,
everyone.
thank you. A little technical difficulty there. Sorry with the Zoom. Thank you. Really great being here. First time. So big TradeStation user for over about 24, 25 years. And thank you again, David, and TradeStation for having me here tonight.
Yeah, we'll have you on. I'll just say that I, as someone who uses TradeStation, always excited to talk to someone like Steve to see some of the tools he uses. And you just decades of experience trading in multiple asset classes and also a power user TradeStation. Just really excited to see what we're going to learn. He's got a presentation. I'm going to give him the floor in a second. I just want to tell everyone to please ask questions in the chat, and Jesus and I will manage those, and we'll pass them along to Steve when he's done presenting. You should have it.
You get it? Oh, okay. That's it. How's that?
Bingo.
All right. You guys can see me?
Yep.
All right. Jesus, my God. Okay. All right. Thank you very much, David, for that. And again, thank you, all of you, for being here today. My name is Stephen Kalayjian. I am the founder of SKTrading.live. And just to give you a little background, I am 63 years old. I've been in the world of trading for over 43 years. Basically, my first two trades I ever did was trading options. And for me, I then went to equity trading. I've traded nearly 2 billion shares in my life. And basically, my niche was day trading. I love the ability to be in and out at the end of the day, to be able to be flat where you're not focused on overnight positions. Now, I do take some overnight positions on things I have views on or swing trades idea, but I believe that if you're able to compound your returns every single day, if you're trading index futures, if you're trading equities, ETFs, it's about hitting singles and doubles all day long. My methodology, as you're going to see here in my presentation, is really combined using three time frames, a 15, a 30, and a 60-minute time frame. I look at the math on that based upon, I have an indicator 4, which gives me the ability to recognize 5 conditions in the market. Those 5 conditions are a trend, a buy reversal, sell reversal, a correlation, and disconnect. Again, the presentation you're going to see here, I built my chart overlay on TradeStation, and I have a lot of TradeStation customers that come to my stream every day from 9 to 4. But bottom line here is that for me, again, if you're going to trade index futures, you want to also understand that you need to focus on using the underlying ETFs. The math is different. When you're using the futures markets, the math that I look at is about 22, almost 23 hours in a day. And the underlying ETF I look what's called RTH, real-time hours. So it calculates from 9:30 to 4. So basically, what I look at here is correlation studies. So if you're trading the S&P futures, you want to look at the underlying ETF, the spiders. And if you want to look at the QQQs of the NASDAQ, you need to look at the QQQs. If you're just going to trade them outright, then that's a different story. The Russell futures, the RTYs, you need to look at the IWMs, the YMs, you look at the diamonds, and if you're looking at the gold futures, you got to look at the GLDs during the US session. If you want to trade the Tokyo session, and or the European session, then that's a different story. You don't need to, you can just trade the charts independently. Again, I look at 3 time frames, a 15, a 30, and a 60. I do use the smaller time frames for entries and exits. And I also, of the 5 conditions that I have, a trend, a buy reversal, sell reversal, correlation, and disconnect, I do, of the 5 conditions, each condition has 2 strategies, a buy and a sell divergence. So 3 time frames, 5 conditions, 10 strategies. That's it. All my strategies are based upon buy and sell divergences. And as I'm going to show you in the presentation, everything I do is based upon technical analysis, no fundamental analysis involved at all. And again, it's about understanding the technicals and how I have everything lined up on my chart overlay. Again, what you're going to see here is what I built on TradeStation and what I use every single day. And to I stream to in over 100 countries around the world. All right, so let's just go to the next slide here. All right, so again, I have over 43 years of experience. I worked on four different exchanges. I started on the American Stock Exchange, the New York Stock Exchange, where I was a member. Okay, then I went over to the COMEX, and then I went over to the Board of Trade. I was looking to go into the 30-year bond pit. I worked around there, worked with some of the biggest traders. And again, it was a great experience going out to Chicago and seeing that action there back in the old days in the 30-year bond pit. I have an impeccable track record. I've been doing this, like I said, now over 43 years. I do work with a lot of big proprietary trading firms, some of the biggest hedge funds in the world. And I am proficient in all the asset classes here. And again, one of my most favorite assets is futures trading, the futures markets. S&P futures are my favorite. Gold is my second favorite. And it's really an unbelievable opportunity to be able to trade in this environment. Coming from working on the trading floors, then back in 1991, working upstairs and working and trading in these markets has just been one of the greatest joys of my life. It is just really amazing how when people are able to I'm able to see market direction and patterns that repeat themselves. Every single day in my live stream, what I preach all the time is everything I do is based upon visualization and studying the charts and repetition. So visualization and repetition is constantly what I strive each and every day, because I can tell you that by looking at what I see, the patterns repeat themselves throughout the day. All right, next slide. Can we move to the next slide? All right, Billy's got it. Again, these are my 5 key words that I use. My 5 key words are consistency, discipline, confidence, patience, and passion. One of the turning points of my career was I ran into a person on the COMEX who told me when he was in the gold pit that he said he was a clerk making $100 a day, $500 a week. And he said that he decided to get married, they had a baby. And then next thing I know, he decided that he wanted to go be a local in the gold pit. And he said to me that his goal was to make $100 a day for 1 month and then bump it up to 200, then 300, and 400. And when he hit his goal, he stopped, he took his trading cards, put them in his pocket, and he said that was the end of it. And then he bumped it up. So I took what Steve taught me and I said, okay, I'm going to try to make $100 a day for a week, and then 200, then 300, then 400, then 500, and escalate it. In 1991, I made close to $2 million, and it was just an amazing opportunity for me. I made $2 million for the firm, and then what I got paid was a portion of that. But again, it was for me just to being consistent every single day. It's okay to take a loss as long as you apply your stops, and there's always another trade out there. And what I learned from Steve was the consistency factor is the ability to come back every single day thereafter. Okay. And when you hit your goal, you stop, you watch, you learn, you listen. And that's what I preach every single day. Discipline, without discipline, there's no game here. You can't, I've run into so many people who trade without stops, people who basically just have no regard and they're gambling. And I tell people, let's get something straight. Do you drive a car without brakes? Right? You don't. So the bottom line is you don't drive a car without brakes. So why are you going to trade without stop orders? Confidence, the software I created, the mentorship I give to people, the experience I have gives people the confidence to be able to identify the trades, to be able to understand the technical studies that I've combined. Patience. Someone said to me today, hey, Steve, are we looking to short me? I'm like, nope, I'm patient. I'm looking for a higher price, or I'm looking for a pullback. You got to be patient. You wait for the patterns to set up. And of course, passion. When I wake up every morning, the first words out of my mouth is I say, thank you to the good Lord for giving me this unbelievable ability to be able to do something I love to do every single day. And that's the trade, because every single day is a different day. And all you want to do is challenge yourself to be the greatest. You don't want to be good, you want to be the greatest. Okay. And I've had the opportunity to work with some of the greatest in the world who are still friends of mine today. But for me, it's about the end user being great, the end user achieving greatness. And that's what I really strive for each and every day. All right, next one. All right, we went over these already. Again, these are my 5 basic conditions. Like I said, trend, I have a trend, buy reversal, sell reversal, a correlation, and a disconnect. The correlation and disconnects, a lot of it has to do with the underlying ETFs with the continuous contracts. With that being said, it's just more or less the understanding that the math is completely different, and when they align, you better be going in that direction. Okay, next one. Okay, again, like I said, each strategy has of the 5 conditions of buy and sell divergence, so a total of 10 strategies. Went over this already. All right. Again, these are the time frames I look at: short-term, intermediate, day, short-term, intermediate term, long-term. So when I look at the intraday, I look at the 15, the 30, and the 60. On the intermediate term, I look at the 60-minute, the daily, and the weekly. And for the long term, for example, the daily, the weekly, and the monthly. So for example, when Bitcoin was trading below the, I think it was like the 108 and 108,000 and change, I saw that there was an intermediate term trade in Bitcoin off one of my daily buy signals, and Bitcoin rallied 10,000 points in about 5 days. So again, it's really about understanding when you use what I portray my method as combination methodology. I looked at the daily, okay, I looked at the weekly, and I looked at the 60-minute time frame, and it all gave me an unbelievable buy on that particular asset. So again, when you start using multiple time frames, and this all came about when I was trading, when I was building this, I was watching the Rose Bowl one day back in, I think it was, Jesus, it was 2000 and 2001, maybe 2002, 2003. And I said to myself, when I was building my software, which you're going to see, I said, I jumped up in the middle of the halftime. I handed my little girl, who was about 2 years old, to my wife, and I said, I'll be back. And she's like, where are you going? I said, something clicked. And I said, what is it? And I'll tell you later. I went to the office and I started using the multiple time frames, opening up the tabs and creating them on TradeStation. And I started seeing a lot of patterns that I wasn't used to seeing when I was just using a singular time frame. Really important to use multiple time frames, especially if you're long-term trading, the daily, the weekly, the monthly, very important. Okay. And if you look on the intermediate term, the 60-minute, the daily, and the weekly. Okay, next chart. Okay. All right. So this is what my research has shown me. If you're using on a pattern, you'll get anywhere between 4 to 6 great trades a day using the 5-minute time frame. Today we counted, I think we're on our 5th trade here on the S&Ps off the longs, and you get anywhere from 2 to 3 trades. It could be up to 2 to 4 trades a day off the 15. Again, I only strive and look at technical studies. I do not use any fundamental analysis. And I will tell you this, I taught this to some of the biggest hedge fund managers in the world. You cannot trade the S&P futures or index futures during the US session without looking at the underlying ETFs. Very critical. A lot of people say to me, Steve, indicators lag, and they're 100% right. They are 100% right. Okay, price leads, indicators lag, but the way I have everything structured on my chart overlay that you're going to see, which is built on TradeStation, that once you have the price set, the algorithms and everything I have aligned will paint the picture, and then I know exactly how to react off of that to identify market direction, understand the buy and sell divergences. So again, that is a fair point. Indicators lag, but the way I have it set up, that the indicators actually paint the picture after the price movement, and then I know what to do after that. Okay, next one. So a lot of people say to me, how much time do you have to trade during the day? Because there's only about a million or so people in the world that can actually trade the US session where they don't have a full-time job, and they're able to take the time to be able to trade. So learning to and asking yourself how much time you have to trade during the day is very important. I have people who trade just the morning session. I have people who trade the pre-market. I have people who trade the Asian markets with me. I have people who just come in and out. Then some there are diehards from 8 to 4, but it's again, everybody's different. How much time does it take to learn my methodology? It could take up to 10 to 15 business days if you really have the time. If you have like spare time, it could take about 30 days or so. Okay, again, it's only 3 time frames, 5 conditions, and there are 10 strategies. So I don't make it as difficult as it may seem. I try to really simplify it and really get to the point that as long as you put some time into this, you will learn every single day. All right. Proper trading setup. Well, again, you want to invest in yourself. You want to have the right amount of equipment. To trade off a laptop is probably not the most ideal situation, but what you want to be able to do is to be able to identify the what you're needed. Whether you need 4 screens, 6 screens, 2 screens, 8 screens, really is up to you. Obviously, finding the right broker. My broker's TradeStation, and I love them. And for me, like I said, I've been with them for over 26 years, maybe 25 or 26, maybe even 27 years. And understand that you got to be comfortable. They got great technology and they have everything that you need, the great margin requirements, especially trading, and of course, the great customer service, which really is really very important. Again, I have someone I've used for many years, Peter Albino. He's unbelievable. And I get nothing but compliments from people who opening accounts with him, and he's just a phenomenal rep and represents TradeStation at the highest level. Okay. Understanding your margin requirements is very important. Okay. Somebody called me one night and said, Stevie, there's $18,000 on my margin trading the Tokyo session. You got to be aware of your margin. Okay. During the day, the margin requirements sometimes in volatile markets like we had late March, early April. Many firms across the board jack their margin requirements higher. You got to, it's part of the game, but you should really know in markets like this what your margin requirements are every day. Again, I use multiple time frames, like I told you, using the ETFs when trading futures, which I explained. And again, for those of you who are new and are beginners here at TradeStation, my methodology to tell people is once you get the software, if you guys are experienced, this should go in one ear out the other. But you start paper trading, and when you do paper trading, then you go into micros, and then you go into the big ones. Okay. I remember I was having dinner with the CEO of the CEO of the CME, and he was so excited about launching the micros, and it really is a game changer for so many people because it really got them involved. And then eventually, if you're good enough what you're doing and you learn properly, then you can go to the big ones, the E-minis, obviously. Most important, set goals for yourself. I set goals every single day for myself. What I want to hit. If I hit that number, I stop. Or if I have a really great day, you want to then say, okay, I'm going to risk this and lock in that. Setting goals is really important. Whether you're setting goals as an athlete, whether you're setting goals in business, whether you're setting goals in trading, it's the same thing. You set goals. Okay. All right. Also, having the right mindset. I tell people all the time, trading is, to me, I try to make it really fun and exciting. But more importantly, what I love about trading is the challenge and the ability to really just see it, take advantage of it, and then go from there. But more, again, having the right mindset. If you lose on a trade, fine, no problem, as long as you have preservation of capital, but you can't get blown up and not adhere to stops. And then the worst is the revenge trading aspect. Revenge trading to me is absolutely just the most destructive way anybody can be in this game. All right. All right. Next chart. All right. So on my TradeStation chart overlay, I use what's called a 10-bar weighted moving average. So this is on every time frame, and every time frame, the number, whether it's a 3-minute, 5-minute, 15, 30, and 60-minute time frame, every time frame is absolutely, the numbers are different, obviously, right? The numbers are different. So here you can see the 10-bar weighted moving average, and I use this moving average to get my ranges and to get a really great understanding how far the price is from the 10-bar. I have strategies for that. I have strategies to see on really great pullbacks and significant uptrends or negative trends. As the price gets up, I'm looking to see where the price is within the relative to the 10-bar weighted moving average. So this is very critical in my studies, in my way that we trade at SK Trading. All right, next. Okay, the first indicator is a MACD, just simple 12-26-9 MACD. But again, it's when you see the whole charts towards the end, indicator one, you can see here a solid white line, and I call this a pivot line. And the reason I call it a pivot line is because I want to see where the MACD is. If you learn from me, you can see that the yellow over blue is what's called a positive MACD, and I'll say blue over yellow is a negative MACD. So there are strategies when the MACDs are positive from above the pivot or negative from above the pivot, or if they're positive from below the pivot or negative from below the pivot. So again, when I'm just going over the indicators here now. So, and the next one right here, we're going to look at a directional movement. Get the next chart. Okay. So there's two indicators in here, two indicators, and one is an ADX. And when an ADX is sloping downward, really, I try to just keep it very simple. I say that there's no trend, involved. If an ADX is rising, okay, then what you do is you're saying that there's a trend involved. Okay. Like right now, if you look at the S&P futures, the ADXs are rising on the 3, 5, 15, 30, and 60-minute time frame, and we've had this gigantic run up since about since the lows. But we really started getting this rising ADX right around probably around 11 o'clock in the morning off the bigger time frames, the 15s, the 30s, and the 60s. So we're seeing a very big trending market to the upside. And again, using the ADXs properly and with the combination of how I use all the technicals at once really gives you an understanding of which way the markets are heading. But just by this one indicator too. Also, I'm looking at directional movement and directional movement. Okay, here I'm looking for big buying and selling pressure. So right now, I know you can't see it, but just now, for example, I have a plus 30 between the buy and the cayenne and the orange on the S&P futures on the 15-minute time frame. So there's a lot of underlying buying pressure. That doesn't mean you can't get pullbacks, but the pullback should be on oversold conditions should be rather not as deep and should be setting up patterns for long trades. So again, the buying pressure is very important. The ADX is very important. And this is how more or less I've been studying the markets and seeing how these patterns really repeat up and or down. Next one. Okay, so basically I use an oscillator here. I only look at the cayenne and pretty much I've tweaked this to my liking and it really fits into my world of trading. I don't look at RSI. I do look at this indicator. Like I said, I've tweaked it. And so basically I look for overbought, oversold conditions. And just let me be clear. You could be in a significant oversold condition and the market can drop another 300 points on the S&P. You could be in a significant overbought condition and get run over. But it's the way I use it with the other indicators that you're going to see. Okay, so basically, this is all about me just getting a visual from an overbought or oversold condition, and then I know based upon the conditions how to trade this off of this oscillator. That again, I do not look at the red line, I only look at the cayenne, and this is really important. Now, one thing I will tell you that when I do use this during the day, it's dynamic, means it's constantly ticking, it's constantly moving. All right, but it plots what's called end of bar. So at the end of the bar, it will plot where more or less that the oscillator closes. So you can have the S&Ps trade up to 65 and then close down to 57, and you're going to get a much different reading where it was dynamically to where the bar closed. Okay, next one. Okay, this is my algorithm here. This is my indicator 4 that gives me the conditions here. And basically, this gives me the ability to see on each time frame what the current condition is. So if I'm looking at a 15 and a 30 and a 60-minute time frame, all the time frames are bullish this morning, and they're bullish right now on the underlying ETF. So that's why we're seeing a big surge here on the market. And doesn't mean that you can't, in this time frame, doesn't mean that you can't get buy and sell divergences on this type of move. Whether you're trading the index futures, ETFs, gold, oil, whatever, it doesn't make a difference. You can still, even in an uptrend, get buy and sell divergences, right? So indicator 4 just gives me the ability to see market direction, and then I'm able then to understand where the markets are going and what the next type of trades I'm looking for are in the future I'm looking to take here. And I'm patient, I'm waiting for the setup, and then mostly I'm waiting to see how the markets are going to react based upon this algorithm telling me which way the market is going. So this gives me a clear understanding of where the markets are going. Now, again, I use this oscillator right here, this indicator that I created, and it gives me the ability to recognize the conditions, which are the 15 to 30 and the 60-minute time frames. And that for me gives me the ability then to for me to understand which way the markets are going. All right, next one. All right, before I get into the charts and everything, I want to show you here, number one, right here, these numbers to the right, my right eye, I put them here because my right eye never moves off the current bar. This number right here is the difference between the last price, the distance from the last price to the 10-bar weighted moving average. So right now on the S&P futures, we're 18 points away from the current price to the 10-bar weighted moving average. On the 5-minute, we're about 7 points away. So it just gives me the understanding how far the price is to the moving average. This number here gives me the ability to tell me how far the price is from the algorithm reversing to buy and or sell. Okay, so right now we're about 70 cents here from the algorithm reversing to sell on this particular example. Basically, this number I don't really look at. I put it there. It's just telling me that I'm in a positive MACD in the width between the yellow and the blue. Indicator 2, again, I'm looking at this number 6.2. Right now, it's just showing me the net difference between the two of the buy and selling pressure. Right now, if you looked at it on mine, on the S&P futures, I'm at a 29.6, and it's very, very big buying pressure. But here, it's just calculating dynamically the net difference for the buying pressure. Indicator 3 is my, like I said, my oscillator. It gives me the ability to see the overbought, oversold conditions. And again, this here, the algorithm right here, you can see this is the last sale, and this number right here tells me where the algorithm is going to reverse to sell on that particular time frame. All right, and that is very powerful because I can see things ahead of time. For example, right now, if I want to look, if the S&P futures or the spiders wanted to reverse downward, you would need the S&Ps to drop about 14 points here just to get the 15-minute time frame to reverse to sell. And then the S&P futures would need to take out the 67.47. I'm just giving you these numbers, which are right in front of me, and I'm able to see that. Okay, next chart. Okay, so this is what I'm talking about. This is my chart overlay here. And again, I'm just showing you two time frames, the 15 and the 30-minute time frame. You can see the positive MACD, the rising ADX, beautiful pattern here. Also, you can see here there are yellow dots. These yellow dots represent the price within the algorithm. And the higher the price goes, and if it rallies with the ADX like that, the yellow dots are going to go into the cayenne. You can see the big buying pressure. So this was a beautiful pullback on MSTR on the 5-minute time frame, and then ultimately got a great pullback here on the 15. Really pulled in nicely. Again, got oversold into the rising ADX, oversold into big buying pressure. And if you look to the 30, the 15 got oversold into the positive MACD, rising ADX, huge buying pressure, algorithm positive. And guess what? You had nothing but significant buy divergences on this pattern. Significant buy divergences. All right. And so basically, this is how I look at the market. So indicators 1, 3, and 4, I look at it 85% of the time. And indicators 1, 2, 3, 4, I look at combined 15% of the time. Also, if you were to ask me which is your priority in sequence, priority sequence would be indicator 4 would be my number 1, indicator 1 would be my number 2, indicator 3 would be my number 3, and indicator 4 here, indicator 2 would be my number 4. So we would go 1, 2, 3, 4 in sequence. That's how I look at the world of trading. Okay. If I walk out to go to the bathroom and come back, bam, I look at indicator 4, indicator 1, indicator 3, and then indicator 2. Okay. So again, this is a really great pattern. And I can tell you when things set up, these patterns repeat themselves. Okay. Next. Okay. All right. This is Tesla here. You can see now Tesla right here on the 15-minute time frame reverses to buy, and it correlates with the 30-minute time frame. And of course, it's most likely in this example, I didn't have enough room. It's correlated with the 60. And then I waited for my oscillator after the drop to take the long on the deep oversold. Here, you got the 15 correlating with the 30 and the 60. And then obviously the oversold condition into the positive MACD went right into the 10-bar weighted moving average. And you can see the rise up here in Tesla, monster long. So again, this is what we're able to identify these patterns based upon the mathematics that we have written here within the algorithm, but also using the combination methodology and using multiple time frames, using the multiple indicators to give me the ability to trade the market effectively. All right, next one. All right, this is Microsoft. Okay, you can see Microsoft. And when I read the charts, I always go left to top to bottom. Again, this is built here on TradeStation here. And you can see the positive MACD, the huge buying pressure, the ADX rising, the yellow dots into the blue, which is significant. The 15 reverses the buy. Beautiful pullback on the 5-minute, which you probably can't see now, obviously, but okay. And then what do? You write up the trade. Now, these trades last anywhere from 1 to 8 bars. So let's say you bought the 5-minute here, 1, 2, 3, 4, 5, 6, 7 bars. So up to 8 bars is when these patterns last. And if you look here, this is the pullback here on the 15-minute time frame. So basically, this is the first pullback on the 15-minute time frame after the 30 reverses the buy, and it correlated with the 30 and the 60-minute time frame. These are phenomenal patterns here. Phenomenal pattern. And it gave us you can see the move up here in Microsoft. That was a really great long. Next. Okay, now we're looking at gold here. Okay, in this pattern, you can see here on the bigger time frame, the 15-minute reverses the buy here. And then it correlated with the 5-minute, but also correlated with the 30 and the 60-minute time frame. And so what is the strategy? You wait for indicator 3 to get oversold on the 5. You can see this beautiful pullback here on gold, okay? And it rallied. And then when gold made a new high, you can see that the MACD didn't confirm on the overbought condition. This was a great long, and this was a great short that we took. And this is an absolute Picasso. So again, you could be in a positive trend, okay, and still have sell divergences. You could be in a negative trend, and you can still have buy divergences, okay? So again, this was a really great pattern here to be able to identify this. When the algorithm reverses to buy, it correlates with the 5. It also correlated with the 30 and the 60-minute time frame. Also in this example, the GLDs were in buy mode on the 15, the 30, and the 60. So not only when the algorithm reversed to buy on the 15-minute time frame on gold, it also correlated with the underlying ETFs on the buy as well. And then what do? You buy the first pullback. Look, it pulled. Now it pulled beautifully right into the 10 bar. But I don't want people to say every time it pulls into the 10 bar or rallies to the 10 bar or sells or pulls into the 10 bar, we got to buy. No, I was looking at the pattern, and then the oscillator oversold into the positive MACD. So I had a nice opportunity for calling out and taking a long trade here on gold. Okay, and then you can see the rally up in gold. That's an absolute beautiful pattern. Next. Okay, again, gold here, you can see gold on the 30-minute time frame was negative. The negative MACD here, the ADX is rising, the huge selling pressure. The 15 was already in sell mode, so when the 30-minute reverses to sell, you wait for the bounce on the 15, called a beautiful short, and gold got absolutely cabooshed here. Again, this is also using my indicators built on TradeStation to be able to identify these patterns and able to identify the overall markets. And you wait patiently. You can see the negative MACD, the rising ADX, the overbought into the 15, the overbought oscillator. So where's this going? You're getting overbought into 2 negative MACDs, overbought into big selling pressure, overbought into gigantic selling pressure. And then you can see that the trend changed here on the 30 and it correlated with the 15. And it just gave just one of the biggest sell signals that we're obviously you can see reading into this here. All right, next one. Okay, this is the spiders. Again, why it's so important. You can see the 30-minute time frame on the spiders reversing to buy here, and it correlated with the 15. The MACDs are positive from below my pivot. Good buying pressure on both the 15 and 30. This was a beautiful pattern on the 5, and then you wait patiently for the nice pullbacks here on the 15. Oh, I don't know what I did. Billy, can you go back to that? Sorry, I hit the wrong button. So you can see the pullbacks here. This is a beautiful pullback into the positive MACD. The algorithm, okay, off the 30-minute time frame gave the buy, and then you got the push down here, another long. So again, you're probably getting anywhere between 2 to 3, 2 to 4 great trades off the 15-minute time frame, but a really great pattern there. All right. Again, once I recognize that the 30-minute time frame reversed the buy, then you're able to look for pullbacks here, and you can see how the math works. Again, very important. You can see the yellow dots here, nowhere looking like they're going to reverse to sell, which means that's the price within the algorithm here. All right, next one. Again, gold. Now this is the GLDs. This is the same pattern that I showed you before when the 15, this is the 15 now, reversing to sell, and it correlates with the 5-minute. Again, in this example, the 30 and the 60-minute time frames were already in sell mode on the GLDs. And so what do you look to do? You short the first bounce on the 15, and you can see the drop here at 278, and you can see the drop of actually go 278 here roughly and change. You can see the drop of about $8 to $10 on gold. Now 278, those are many moons ago because the GLDs are 355. So again, just going to show you how these patterns work and how the understanding of how these patterns repeat themselves. And this software gives me the ability to see the direction, to see the trades, to see the divergences, and to see the overall conditions in the market. All right, we have a couple more, and then I think we'll take some questions. Again, this is how we just did the GLD. So now we're showing you the continuous contract, the gold futures. And so basically this was the gold right here, 3,000. We're up 800 points from there. So you can see the push up here about 18, 19, 20, and you can see the drop here on gold. All right, a big drop here on gold. And again, you can see this is the push, the 15, the 5-minute correlated with the 15. And then this is another great short here. This is what's called a double red short, meaning the 5 correlated with the 15, the 30, and the 60. And again, you can see the pattern, and gold just got absolutely slaughtered right after that. Really great pattern there. Again, this is what we're able to identify using the software. Again, the math will set up. Again, the price leads and the indicators lag, but they paint a picture for me. So if I didn't know that this indicator for reverse to sell on the 5-minute, I would never have known to short this bounce right after it reversed and then just got absolutely hammered there. Okay, next one. Okay, again, I'm just showing you the GLDs here. You can see why I called that short. The GLDs reversed to sell a little earlier than the actual gold did. So when the gold reversed to sell, it not only did it correlate with its 15, it also correlated with the 5-minute GLD, and it correlated with the 15, 30, and 60-minute time frame on the continuous contract. You can see the negative MACDs, the rising ADX, the big selling pressure on both the 15 and the 5. And what do you look to do? You short the first bounce on the 5, and you can see the drop. So it actually gave confirmation. And that's why I tell people all the time, if you want to trade the futures markets, you really need to look at the underlying ETFs during the US session. And that is very important. Okay, this is the Qs here again. Now we're looking here on the Qs, the 30-minute reversing to buy. Again, MACD is below the pivot. It correlates with the 15. And what do you look to do? You see the positive MACD. You could look like every oversold condition on the ETF. You could have bought ETFs. You could have bought NASDAQ futures. Again, you want to be on the right side of the market. You want to be able to identify the pattern. You want to be able to visually see where the markets are going based upon the overall markets in a way that you can identify the math. A visual gives you the ability to see what's happening, and then you can see shifts in the market without any guesswork. That is exactly why I spent nearly 10 years of my life building this here. And again, I'm proud to say I built it on TradeStation. Next one. Okay, so this here is the, what is this, S&P futures? I can't see it. Is this the S&P, Billy? Yeah, wow, 5,800, yep. So you can see here the 15 reverses to buy on the 15, and then you look for pullbacks on the 5-minute time frame. These are really great patterns here. Again, getting oversold into the ADX. And then here is the pullback off the 15. Right here, the 15 gets deeply oversold. Again, when this pattern happened here, you're going to really understand that the 30 and the 60-minute time frames are still in buy mode. But mostly what you want to do is you want to buy pullbacks, or just you can just stay long and just keep raising your stops. And if you did that, you would have had a pretty nice day here. Okay. Now, once these MACDs went negative here, okay, any push up should make a lower high. And then ultimately you can see it did not make a new high on the overbought condition. And then ultimately it dropped to set up the 15-minute time frame. Today, after this gigantic run, I told everyone that I believe that we're going to get a really great setup today off the 15-minute time frame between 12 and 2, and exactly 1 o'clock. The S&P futures pushed down to 67.39, and now we're almost up 30 points off of that. But again, very big trend, very big patterns. Got oversold into the positive MACD, rising ADX, big buying pressure, and we haven't looked back. And since 1 o'clock, now it's almost 3 o'clock. The S&Ps are all up about 28 points here. Soon to be, if it ticks 69, it'll be up 30. Okay, you can see here, this is the S&Ps again. You can see here why I was calling shorts on this pattern here. I was looking for shorts here off the 30-minute. You're making new highs, and the MACDs are not confirming on the 60 and on the 30. Again, you could, like I said, you could be in a positive trend, okay? But if you're making new highs and these MACDs are non-confirming, okay, and you get overbought readings of significant magnitudes, then you should be able to understand the importance, okay, of taking these visuals of seeing the divergences. And this is what I teach. All the strategies I have are based upon divergences. And it's really an unbelievable method, and I love it. And I'm blessed that I was able to create it and be able to trade off of it. Next one. All right, so this here is this gold? I can't remember. This is gold. Again, you can see how the 30-minute reverses to sell. Again, correlating with the 15, and then you short the first bounce on the 15, got overbought into the negative MACD, rising ADX, big selling pressure, rising ADX, big selling pressure, negative MACDs. Gold had only one way to go, but down. Absolutely cabooshed. Absolutely unbelievable pattern there. All right. Again, being able to identify these patterns, like I said, you're probably good for 2 to 3 great trades off the 15 and 4 to 6, maybe 4 to 8 great trades off the 5-minute time frame. This is the GLDs again, how the GLDs reversed. It's just to show you the correlation between the two, okay? How the GLDs reversed, they correlated with the 30. And again, the GLDs confirm what we just saw in the gold futures market. So again, great patterns there. David, I know we're about 50 minutes, so we want to take some questions here, or I can keep going.
Sure, Steve. We do have some questions, and I'll say this has been not only interesting and detailed, but inspiring to everyone, I think, looking to trade actively in the market, especially with futures. Now, we did have one question. First one coming from Oscar was, when you trade the future and you're looking at an underlying ETF, what exactly are you looking at on the ETF in terms of comparison? And I think I
Well,
would just add,
yeah,
are you looking at levels or direction or
no,
what?
I'm looking at my algorithm indicator 4 to see what the condition is. Is the condition going to be in a disconnect, or is it going to be is it going to correlate with the futures markets? Or I'll give you an example. Yesterday I walked in and we had buys in the underlying ETFs on the 15, the 30, and the 60. But the continuous contracts, I think it was yesterday or the day before, we were negative on the 15 and 30 and 60. So people said, okay, who wins the war? And I said, I'm going to take the fact that the underlying ETFs are still bullish on the diamonds, the Qs, and the Russell. So I'm going to go with the underlying ETF in this, for example. And what happened? The market shot up. The continuous contracts went reversed to buy on the 15, 30, and 60. Pullbacks were warranted to be go for longs. So that's a great question, but it all stems from my algorithm on indicator 4 that gives me the ability to see the market flip in a direction that gives me the ability to now decide what to do. So if I'm looking at the underlying ETF and the underlying ETF is more or less still in the buy mode, and then the continuous contracts start to reverse the buy as well, now we're in a positive trend and we should be going higher.
Great. Next question from Curtin. Can you touch on how to recognize or give an example of seeing the correlation and disconnect?
It's a methodology that I created. And basically, again, if you're trading, like, for example, NVIDIA, okay, so NVIDIA coming into today, I was bullish on the 30 and the 60-minute time frame. And then when the 60 reversed, that's a great question. So today, NVIDIA dropped early, the 15s reversed to sell. And I said I'd be looking to buy NVIDIA because NVIDIA was still very bullish on the 30 and 60-minute time frame. And then later on, we got this big sharp rally in NVIDIA. The 15-minute time frame reversed to buy. And then we caught a great long at 12:30. Around 12:35, NVIDIA ran north of $1.20 off the 15. So everything, you have to visually see the program work entirely. But these are great questions. And as far as, like I said, if you can master if you can master the methodology, and again, I always say to people, I'm not asking you to memorize 500 different patterns. I'm not asking you to memorize and open up a book and say, oh, this is a head and shoulders pattern. No, everything I do is based upon my indicator 4 and the combination methodology that I am able to see and using the indicators in order to trade effectively. And that's what I teach every day as a founder of SK Trading. And it gives me the ability for people to see the markets based upon pure mathematics and technicals.
Very good. Now we have a question from John, who's out west. He says, "What are your thoughts on trading in the afternoon only because he's on Pacific time?"
That's great. If you can do that. Also, the Asian market session is absolutely phenomenal. I was here last night and we saw silver go from 46.85 to 40, I think, am I saying it correctly? 49.8. I think silver ran a whole point. So it ran from 48.85 to 49.85, and then from 49.85 all the way down to I'm sorry, let me rephrase that. Silver went from 46.85 to 47.85, and then dropped to 46.90, and then rallied from 46.90 up to 47.30. There's a lot of movement, okay, especially if you're out in the West Coast, between gold trading in the night session, especially when the Chinese market opens at 9. It's a great time. If you only could trade in the after hour, a couple hours in the afternoon, look at the Asian markets. It's a phenomenal market.
Great. Here's a question from a couple of users asking in different ways how these indicators are made available to customers.
I'm a founder of SK Trading. You can always look up, but again, these are built on trading on TradeStation here. And so basically, I'm very dedicated to TradeStation, even giving me this great opportunity here. But more or less, I spent nearly 10 years of my life developing this. And again, it used to be available in the store, but the store went away. So I built it, and if anybody, they could look me up as a founder.
Very good. All right. There was a question about one of your indicators that had the 10 bar average, and he's asking if it was a 10 period simple moving average.
It's a 10 bar weighted. It goes back to
Weighted.
the inception of the asset. So for example, if there's a new IPO that came out today, it would start from this moment on.
Another question from Oscar. How many candles at a time do you trade on the 3 or 5 minute? I think he means charts.
I don't look at candles.
Okay.
So he's asking how many
Bars, I think.
So again, my research has shown me that on a 3 minute time frame, we'll get anywhere between probably 8 to 10 great trades a day. On the 5 minute, anywhere from 6 to 8.
Okay. There's a question about the slow percentage K as an overbought, oversold indicator. It wasn't really clear the person was asking, but since it's such an important part of what you do, want to briefly just give a little bit more explanation of that?
When in building this, I tried many different oscillators, and I decided to take an oscillator and tweak it many times over. And it took me quite a while because I wasn't getting the right readings on the conditions. And so basically, Billy and myself went back to the drawing board a number of times, and we came up with a calculation that we see that fits significantly well within our indicator 4. And I think that it's like I said, we use it as a Bible. We use it to trade off of. We use it to identify patterns here. Like just now, for example, during the webinar, I saw Microsoft just push down to 517, below 517.50. I'm standing here actually. And what does Microsoft do? Just rally $2. Okay. So again, we spent a lot of time, but again, the oscillator, the cayenne color, I don't look at the red. The reason why I built it like that was to be able to identify, I wanted to see the spacing between the two at times, but I only use the cayenne, which is the one I currently right now you're seeing on the GLDs. But again, it really is something that really fits well within our indicator for our algorithm.
Okay, good. One more question here from Richard. Given your long history in the market, is there anything unique or different about today's markets?
Oh, I think, look, I grew up in an era when there were 8 point markets as you, David, right? And what propelled me to do this is I fought feverishly with the SEC against the decimalization mentality. I thought there was me a lack of transparency, lack of depth in the markets, and I was one of two other people in a room of 100 people fighting for it. I thought that when you see stocks like Hewlett Packard, I remember with a 70-cent spread, I said, good Lord, the game's changed. So I said, I'm going to build technology to help me identify market direction and see patterns that I've never seen before. And like I said, I thought it was going to take me 1 year of my life. It took me nearly 10. But I think today, now, I have to say, is even more exciting. I think the futures markets have gotten tremendously bigger. When I was trading, my friend Victor Sprandio, one of the biggest S&P traders in the world at the time, we trade the big ones. And then when they went to minis, then now they went to micros. I think this opens up a whole new world. I think trading is going to be bigger and better in the next 5 to 10 years. I think I'm seeing more and more people really wanting to learn about futures, learn about trading, and it just gives me a lot of joy that we're able to have this webinar today and to really get people understanding that the markets are purely, in my belief, okay, are all technical based, and that patterns repeat themselves, and that you once the math is created, you know how to trade these patterns. And I do, like I said, I will say it again, I truly believe these patterns repeat themselves over and over again.
Great. Well, thank you very much, Steve. This has been an amazing presentation. I want to thank Steve for being with us. Now, we do have a couple people have asked about a recording. We do expect to have something posted on YouTube in the next several days. I want to thank everyone for being with us. And thank you also, Jesus, for helping out. And thank you, Steve, for joining us. And again, today's presentation was called Targeting Potential High Probability Future Setups with Steve Kalayjian from SK Trading. And this is David Russell at TradeStation.
And I want to say thank you, David. Thank you for the team. John, thank you, John, the CEO. And thank you all, Peter Albino. You guys are wonderful, amazing. I'm so blessed to be able to have this opportunity, but also to be able to been a TradeStation client for so many years of my life, and great member firm, everybody.
Great. Thank you very much, Steve.
Thanks,
And
David.
hope everyone has a great day. Thank you
Have a
much.
great one. Thank you. Be well.